But let's get in a quick thought or perspective from the management of Symphony as well. They've posted a 19% jump in PAT. More importantly, I think the highlight is the EBITDA margins seem to have been restored to the earlier levels. As I read, the EBITDA margins are at about 34.8%. The Executive Director, Rupesh Shah, joins us right now on the show. Rupesh, good having you. Thanks for joining in. So correct me if I'm wrong, Rupesh. There were two predictions of sorts that you made in your last call to us as well as in the annual note. One was that operationally the numbers will start looking better and will be restored to the earlier levels, which you have really successfully reached. But the sales numbers were a bit disappointing. Was it because of the extended monsoon, and will that correct itself in the current quarter?
So as far as sales is concerned, for the quarter, we have achieved top line of about 184 crore versus 130 crore for a June quarter. So on Q2Q, the sales growth is more than 50%, while on YOY, that is September 16 was 150 crore and now it is 184 crore. So on YOY, the top line growth is about 22%. Now, this sales growth needs to be viewed in line with summer of 2017 for air cooler industry was a pathetic summer. Most of the peers and competitors are sitting on huge inventory, not only those competitors, but also their trade channel. While in our case, we have achieved normal top line growth in line with our estimate given, that is 20-25%. Coupled with that, as far as profitability ratio is concerned, which was about 20-22% in June quarter, now we are back to 34%. So I believe that our performance is reasonably good considering totality. And this is despite the fact that GST has been introduced with effect from 1st July, despite the fact that there have been some initial hiccups.
No, I completely agree. I mean, which is why I started off the interaction, Rupesh, saying that, EBITDA performance has been rather comforting after what happened in the previous quarter and the quarter before that. Okay, so tell us, one is, where have the sales come from? Is it, and how is the institutional segment looking like? And how is this quarter shaping up to be?
Sales is mainly from domestic sales, including organized retailers as well as traditional retail channel, and it is across the geographies. Secondly, it is the new models which have been also received very well. That is the high-tech range of models having gesture control and Insta Chiller, also the diamond range of models, and on top of it, as it was conveyed earlier, our iTouch range of model where we had launched at introductory price, the pricing is back to normal. So one is the pricing power, and second is our volume growth is in line with the value growth.
Rupesh, not only the EBITDA margins, actually the gross margins too have improved during the quarter. For the month, it's 53.2 versus 51.8, which was seen in the corresponding quarter as well. So definitely there have been attempts to minimize the cost pressures as well. What I also want to know, Rupesh, is since GST was implemented and you guys are the leaders in the air cooler segment of almost 50%, correct me if I'm wrong, because of GST implementation, did you see any sort of shift in from the unorganized to organized market, and have you benefited from it, or that benefit is still pending? Do you see it coming in the coming quarters?
No, we really expect the benefit to accrue to organized sector in the days to come, because unorganized sector, many of them were evading the taxes. But we will really come to know the extent of benefit and shift in the peak season, that is in the March quarter and more so in June quarter. But considering the initial feedback and the response, I believe that even unorganized retailers are also moving to compliance mode, and hence it will be healthy for the organized sector.
If you try and look at the details of your margin, if you look at the cost structure, interestingly, your on a quarter-on-quarter basis, the employee cost has gone up by 40%, whereas advertising expenses have fallen by 90%. If you could put these into perspective, and it would be easier for analysts to kind of forecast how the margins would look like going forward.
Frankly speaking, in our kind of business, it can't be compared Q to Q. A better comparison is YOY and that too YTD. As far as advertisement and sales promotion expenses are concerned, we need to spend during peak season when customers really buy the goods. And the peak season for air cooler is March quarter and June quarter, when really end sales takes place. As far as September quarter and December quarters are concerned, it is the trade which leaves the inventory, of course with 100% advance, and hence we need not to spend much in these 2 quarters which are relatively off-season for the customer perspective.
Okay, Nupesh, final question from my end at least. I think in the annual report as well, which I have in my hand right now, you guys mentioned about how the last quarter was but an exception. The quarters ahead will see the return of normalcy. Now, normalcy in the recent past was a 25% growth rate which you guys used to forecast and beat it comfortably. Is now the new normal 20% or would you believe FY18 could see a 25% growth top line, bottom line over FY17, and whether those numbers can be reenacted FY19, FY20 as well?
Our medium to long term growth estimate is in the range of top line growth is 20-25%, but it is certainly on a CAGR basis. It is not for a quarter or not for a year. Because in our kind of industry, there may be a quarter or two, there may be a year or two in which there may be abnormal growth or there may be lower growth also. So on a CAGR basis over a period of 3 to 5 years, our estimated range is 20-25% and maintaining current level of profitability margin.
So, Rupesh, will the second half be better for the company?
I think as of now, we have reasonable visibility of December quarter. So December quarter seems to be good. As far as March quarter is concerned, it's also partly dependent upon weather god. So for March quarter, it's too early to forecast anything. But very importantly, I wish to highlight it, even though it has not been asked. See, in our kind of business, we have really adopted the capital light, asset light, working capital light business model, and hence, during the quarter, our capital employed in the main segment, that is the air cooler business, was negative capital employed. And hence, in a way, the PBIT % on the capital employed was infinite. And as far as for 6 months are concerned, the capital employed was minuscule, which translated into 4-digit % return on capital employed. I think that's a noteworthy performance,
Sure.
which I wish to highlight.
All right. Thanks a lot, Rupesh. Thanks for joining us today and congratulations on good set of number. That was the management of Symphony. The numbers compared to June quarter were definitely better, but some impact of GST seen there, and clearly highlighting that in quarters to come by, probably there could be that shift from the unorganized to organized market, which the management mentioned. They see the benefit coming in the peak season. Probably in the March quarter, you could see some increase in the market share with regard to the air cooler segment.